Good day, ladies and gentlemen. Once again, we are still in chapter 9 of the prescribed textbook, and I just want to bring this across your mind that you have done chapter 8 in your second year or whichever year it is. Now that we are done with chapter 8, I will not be going through chapter 8 in chapter 9. And you can be required in chapter 9 to do ledger accounts, and you can be required in chapter 9 to do general journals or general entries on some of the transactions or on some of the selected information. And chapter 9 does not have requirements to do ledger accounts, but you can still be required to do ledger accounts such as direct material, such as work in process, such as direct labor, such as manufacturing overheads, such as finished goods, such as cost of sales. So please familiarize yourself with chapter 8. So I will not be doing chapter 8 because I do have recordings of chapter 8. So please go and listen to my two recordings. One is on ledger accounts and one is on general journals. So please recap and refresh your mind on that. We can ask you ledger accounts in chapter 9. Please, I want to emphasize this highly. Now, we are still on the job costing chapter, where the company produces goods and services according to the order that has been placed by the company. It's normally called job costing, or sometimes called production on order, where the company only produces specific number of units based on the requirements of the order that has been given to us as a company by the customer. So now that is what is in our mind. Remember, the product that we produce has to go through the stages of production. If we do have stages of production or different processes, but we still have a chapter called the process costing. Now we know very highly that any product that we produce has direct material, has direct labor, and has manufacturing overheads. So now whenever we are looking at the production of these orders that has been given by the customer, we need to know that these products will need material, will need labor, and we must add the applied overheads. So always have that at the back of your mind. And again, be aware that the material that we need, it must have been purchased and recorded in the material ledger account. And now we have to take into account that material from a ledger account point of view when we are required to do the ledger account. So hence I'm emphasizing the importance of the ledger accounts. Now it says, Thandi Ltd makes a wide variety of gear assemblies for industrial applications and absorbs manufacturing overheads at a predetermined rate of R3.70 per machine hour. So our POR is based on machine hours, and on the table we can already scan that we do have machine hours, which is our base to calculate our POR, meaning our base. It could be actual or budgeted. We don't know as paid, but obviously this will be actual because the budgeted base was already used to calculate the rate of R3.70. During the month of May 2002, the company worked on the job listed below. The company, or this must be doubled, typed. The company worked on the jobs listed below. We have these three jobs, which is K11, K12, and K313, not 3133, 313. So we have the material for this job, we have the labor for this job, and the machine hours. Remember, we have our POR based on machine hours, meaning for us to calculate our applied manufacturing overheads, we need to say the actual base times by the POR, and POR times by the actual base, and the actual base times by the POR. This will give us our applied manufacturing overhead that must be allocated to the cost of production. Now let us do that quickly. 3 rand 70, multiply this by 1480. This gives us a total of overheads of 5476. Then we say 3 rand 70 times by 1230. This gives us 4551. And the last one, 3 rand 70 per machine hour times by 860 machine hours. It is 3182 rands. Now that this is done, then let us go further and read what is additional information states telling us. It says compute or calculate the amount of manufacturing overheads to be absorbed by each job and the total normal cost of each job, or the total factory cost of each job. So we need to calculate the cost of each job, and at the same time we need to calculate the manufacturing overhead absorbed, which we have already done that. That's what we were supposed to do. Then it says actual manufacturing overheads for the month of March 2002. I think I had May somewhere. I don't know which date is correct and which date is not correct. I think May was the correct one when I went through the book. Now we have our actual manufacturing overheads, which is 12,980, which must be compared with the applied in order to determine if either we have under or over absorbed our manufacturing overheads. So that's what the question says. Compute the amount of under or over applied manufacturing overheads for the month. So what are we calculating? We're calculating the overheads, which we did. Then after we calculate the cost of each job, then after we determine if have we over or under applied our manufacturing overheads. So now let us go ahead calculating now the predetermined overhead rate. Our predetermined overhead rate is for all the 3 products, which is K11, K12, and K13. K11, K12, and K13. Then we multiply that by our labor, our machine hours. We have our job K11 or K311 and K312 and K313. Then we need to know our rate. Our rate is 3 rand 70. It is 3 rand 70, and our rate is 3 rand 70, and it is based on machine hours. Our machine hours, it was 1,000 something. Machine hours 1,480, 1,230, 1,480, 1,230. The last one was 860, if I still remember. It was 860 machine hours, yes. So we have 860 as our machine hours. Then we multiply, this will be manufacturing overheads applied or absorbed. So now that means we just multiply the two. We multiply, it will give us the total of the manufacturing overheads that are applied or absorbed. 3 rand 70, not 3 rand 30 there. 3.70 times by 860, we get 3,182. Then 3.70 times by 1230, it gives us 4,551. 3.70 times by 1480, we get to 5,476. Then this is plus 4,551 plus 5,476, and it is 15,000. 5,476 plus 4,551 plus 3,182. We get 13,209. This is our absorbed manufacturing overheads. Then we are given the actual, although that is number B of the question. We are given the actual, which will compare to determine the over or the under applied. Now let us calculate normal cost per order, or cost per order. We have 3 orders. Order 311, order 312, order K313. And in these orders we have direct material, we have direct labor, and we have manufacturing overheads absorbed, which we calculated them to be 5,476, 4,551, and 3,182. These are the figures that I'm referring to, the overheads that are absorbed. Then we need to allocate our direct labor, allocate our direct material, then this will give us the cost of each job. Material 15,260, we have 15,260, and when it comes to second order 21,340, 21,340. The last one is 8,890. 8,890. Our labor, it is 17,250. 17,250 and 13,350, I think so. 13,550. 13,550, and the last one is 10,100. 10,100. 10,100. So the cost of production will be 15,260 for K311 plus 17,250 plus 5,476, which is 37,986. Second order 21,340 plus 13,550 plus 4,551 equals 39,441. That is the cost for job K312. 8,890 plus 10,100 plus 3,182. 3,182. 182. It is 22,172. So this is the cost per order, cost of each order. Then after we have, we can say total cost per order. Then that was the first requirement. Second requirement, it was second part of the first requirement. Then the last one is to calculate the over or the under applied manufacturing overheads. So this is what we are to calculate, the over or the under applied manufacturing overheads. The actual overheads is 12,980. So we compare the actual with the applied. So we say actual manufacturing overheads 12,980. 12,980. Then we have applied manufacturing overheads. Our applied manufacturing overheads were calculated to be 13,202. If which one is negative, for me it really does not matter, as long as you know the meaning of the difference. Now we say 12,980 minus 13,202, we get 12,890 minus 13,202, 12,980 minus 13,202, just to verify that calculation. 5,476 plus 4,551 plus 3,182 is 13,209. 13,209. So we have 13,209 there minus 12,980. We get 229 as our difference. So we have estimated, remember, applied meaning estimate. That is what we have estimated, but in actual fact it was 12,000. So that means is an over applied manufacturing overheads. So the over applied manufacturing overheads, it is 229. Now what does this mean? It means we have overestimated, therefore our cost of sales will have to be credited. We'll debit manufacturing overheads and we credit the cost of sales. With that, guys, thank you very much. And I said, please do make sure that you revise also the general entries which can be asked in the exam. More especially when it comes to this variance, you might be required to do the general entry when it's over applied, which means we have estimated more than what has actually taken place. So now how do you account for that when it comes to the cost of sales general entry? So this will be debit manufacturing overheads and we credit our cost of sales. With that, guys, thank you very much.